Hello, my name is Eric Fox, Chief Economist at Veros.
And I'm Reena Agrawal, Research Economist at Veros.
So Reena, it's been very interesting recently. I've been hearing a lot of people talking about how they think the housing market that we're in today is going to start to resemble the type of housing market we saw in 2008 when house prices plummeted precipitously over a 2 or 3 year period. Yet when I look at the data and when I observe what's really happening, it seems to me that the 1970s may be a better comparison for what we're looking at today. So as an example, if we look at inflation that we're seeing in 2023, we've seen it go from about 6.4% down to around 3.7% today.
Well, in the 1970s, inflation averaged around 7%. But towards the end of the 1970s, it had gone up to more than 13%, and it stayed high for a couple of years. But I think inflation was a little bit higher than what it is today. What about mortgage rates, do you think?
Well, in 2023 today, our mortgage rates have averaged about 6.75% on a 30-year fixed loan, and they've been close to about 8%. What about did we see in the 70s?
Well, in the 70s, mortgage rates averaged 8.9%, so we are pretty close in that metric.
And if we look at affordability of housing, interestingly, this year in May of 2023, housing affordability for the first time dropped below 100. So suddenly we're now less affordable than more affordable.
Well, we saw a similar thing in the 1970s as well. Affordability dropped below the 100 mark in 1979, and it stayed that way until 1986. So we are seeing a similar pattern with rising inflation, mortgage rates, that affordability did go down.
And if we look at how house prices have appreciated on an annualized basis for the last, say, 2-3 years between 2020 and 2023, on a nationwide basis, we've seen appreciation of about 10% a year, which is quite high. What was it in the 70s?
In the 70s, we saw a similar rate of appreciation, around 10%. So we are seeing very similar statistics in the two time periods.
All right. Well, I know during the 70s that unemployment might have been a little bit higher than during 2023. Now, in 2023, we've seen unemployment be stubbornly low. It's remained less than 4%. What was unemployment like in the 70s?
Well, I think that is one metric where we see a difference between 2023 and what happened in the 1970s. Then the unemployment rate averaged around 6.2%. And our forecasts are telling us that unemployment is going to slowly edge up, probably reach in the low fours in the next 12 months. So, but we don't expect anything in the 6% range anytime soon. So that is one difference we are seeing.
Well, that's very interesting. So with respect to most of the variables, it does seem like it's the case that today's housing market may resemble more the 1970s than it does 2008.
I agree with that because even during the 1970s, when there was such high inflation, high mortgage rates, the median house price still went up during the 1980s. And that is what our forecast is also saying, that we expect median prices to keep going up, although at a slower pace than what we saw from 2020 to 2022.
Very interesting. My name is Eric Fox.
And I'm Reena Agrawal. See you next time.